I promised to meet you in Tirunelveli on the 10th of March. So the place has been finalized. So I meet you on the 10th of March, the Sunday, at the Maharasi Mahal, KTC Nagar, Tirunelveli, between 4:30 and 7 p.m. See you in Tirunelveli on 10th.
Hi everyone, welcome back to Be Rich. And today I'm going to talk about Tata Motors and what's happening with Tata Motors and try to explain to you, allay your fears. So by end of the video, I'm sure you'll feel more confident about what's happening in Tata Motors and you may be celebrating what's happening in Tata Motors as an investor. And even if you're not an investor of Tata Motors, will be some interesting information for you in this. And keep it in mind for a future opportunity where you see this happening. A few months back, Tata Motors announced that Tata Motors DVR will be converted to Tata Motors shares. Like I said, we've spoken many times about this in other videos with Anand and other people, that how Tata Motors, when they launched the DVR, it was always intended that the share will be finally consolidated and absorbed and made into Tata Motors regular shares. And the reason for the DVR was it had less voting rights than the regular share, and because of that it was had a price difference between Tata Motors and regular share and the DVR share, and it was a great opportunity to exploit, because way back when I started buying the shares at 30 rupees, 25 rupees, it would always be double. If I bought a DVR at 30 rupees, Tata Motors was trading at 60 rupees. So there's a huge gap. And my brother at the time told me it's a great thing. Keep accumulating DVRs at a low price, because anyway you get the dividends of a regular share and eventually it will be done. And this was a long time ago and it's been a long time coming, this thing. So people who have been accumulating Tata Motors DVR for a long time are reaping some serious benefits now. But what broke into the news was not about this. It was Tata Motors planning to demerge their passenger division and their commercial division. So the passenger vehicles, PV, is going to be separated from their commercial vehicles, which is CV, creating two new companies. One will be the Tata Motors passenger division, the other will be the Tata Motors commercial division. And this is for the main reason why they're planning to do this is the passenger division of Tata Motors, especially the JLR, which is the Jaguar Land Rover unit, which produces cars and SUVs and electric vehicles, has been contributing to the bottom line of Tata Motors in huge chunks. And the company feels separating this is time to unlock value. Because traditionally speaking, for the longest time, Tata Motors made cars. Before they made cars, they've been making trucks and buses for the longest times. And majority of their profits used to come from selling trucks and buses, the commercial vehicles. And that has been carrying the weight of the company. But over the years, since they launched their own passenger division, way back, remember Tata Nano, then after acquiring Jaguar and Land Rover, and under new management and new ideas, it has been thriving and it's been gaining larger and larger market share. And the EV division especially is doing very well. And we even recently spoke about the fact they gave a fabulous discount. So entry into EV was more accessible to the middle class and the higher upper middle class who are looking at buying EV cars, who are buying small passenger cars. So that way they've been very strategic and has been growing by leaps and bounds. So it makes sense when the commercial vehicle division is now becoming equal to the passenger and commercial, becoming equal weights, that it's better to unlock both the companies and separate them, because each has a different kind of management requirement. Each company has a different kind of financing requirement, and it doesn't make sense lobbing them together. It's like mixing, oil and water in a weird way. Yes, when you're looking at it, both are liquids, but both liquids really don't gel together, because the kind of strategies you require and marketing mind which you require for doing commercial vehicles is very, very different than compared to a passenger vehicle. Those of you who have used Tata Motors cars for the longest time, like I have since the beginning when they launched Indigo and when they launched the Safaris, the Tata Estate, if you remember, those of you who used it, will remember one of the main complaints which was there was, yes, the engine is very nice, the car looks okay, but just the finishing of the car inside doesn't feel like you're buying a luxury car. It feels very trucky. And that is one of the main reasons, because you had historically very big truck designers working for inside Tata Motors who were designing cars, and you could expect that to happen. That kind of vision takes a truck designing is one way to look at it, and that too, and looking at designing cars is another way. And the person who's very good at designing trucks may not necessarily be great at designing cars. And that too, when you're talking about designing commercial vehicles, these are not meant to look fancy. They're not meant to look fabulous. The interiors are not supposed to be awe-inspiring, but it has great utility value and performance value. And these are the main categories which a designer of commercial vehicles looks at. While a passenger vehicle needs another set of mindset, another set of skills, and it needs another approach. And even if we come down to marketing, the way they used to market it, it was very archaic, the passenger vehicles. Now it's all changed, right? So if you look at it, the showroom, the way you interact in the showroom is completely different from the way it was before. Those of you who have seen the old Tata Indigo, the Tata estates, will know how the showroom experience of a Tata Motors was compared to what it is now. So if you see, there is a huge paradigm shift which is happening. And when this happens, there's a split in management too. And there's a split in lower management. And this can lead to a lot of friction within the company and can lead to a lot of divisions within the company between commercial and passenger because it's under one umbrella. And that can dampen whatever further growth that can happen and even hinder whatever that's come so far. So to prevent this, I think the management has decided it is best to separate these two so both can work separately, independent of each other, and continue thriving. And it's great. As an investor, this is great news. And because not only you'll have a share in the Tata Motors commercial, you'll also get an equal share in the Tata Motors passenger. So you'll have two new companies having a share in each. So if you have one Tata Motors shares, you'll get one of each in each the new company. And it offers you exposure to different sectors in automobile and different markets. And it's great. And I think it's a wonderful way to move forward. Now, the question which a lot of you have been asking is what happens with the DVR? Don't have to worry about it. DVR is already done and dusted. It's been approved. It will happen. This is post-DVR. So by the time this happens, there will be no Tata Motors DVR shares. Those would have been all fully converted and that have been written to history. You'll only have Tata Motors shares because they just announced this. Now it'll take another 12 to 15 months for them to get all the necessary approvals. So this happening is going to probably take 2 years. And as an investor of Tata Motors, you don't have to do anything specific. It's not like the rights issue or bonus issue where you have to apply or do anything. This will happen automatically. So whatever Tata Motors shares you have on that day, record date, will be removed from your demat account, and fresh shares of Tata Motors passenger cars and Tata Motors commercial vehicles will come into your account. Whatever the company names are and registered as, equal amount will come into your account. And then they'll start trading the new companies from there on. Tata Motors will not be traded as Tata Motors anymore. It will be traded as two new companies. This is true throughout all markets, meaning in NSE, BSE, wherever Tata Motors shares are being traded. This will happen universally across everywhere. It's just not in the NSE and the BSE, it will happen everywhere. So keep that also in mind. If you notice now, the question which everybody will be asking is, should I buy Tata Motors shares because this is happening? Well, right now Tata Motors is trading at 1,030. It's being pushed up. If you looked at it in the beginning of March 23, which was a year ago, it was trading at less than 500. And it's pushed. Tata Motors has gone past that and it's gone to 1,061. And if you look at the PE of this Tata Motors right now, it stands at 18.7. So is there value in it? Yes. Should you be looking at it? Yes. Should you consider it? Yes. But it all depends on your goals and what your plans are and what you do with it. But do realize the actual breakage of this and assets and how it's all going to be done needs to be worked out. All that has not been mentioned as yet. How Tata Motors will restructure all its assets, because Tata Motors has factories, Tata Motors has warehouses, it has distributions, it has dealers. So this is just not simple as splitting, an apple, taking a knife and cutting it in half. This is a lot more complicated. So also questions of who gets the assets, how much of the debt is going to be shared, how much of the liabilities, what are the earnings going to be. So all that book value, it's all going to be worked out and be interesting. So if you don't own any Tata Motors shares, maybe you can wait and watch and see. Maybe one will have more value than the other. I do not know. But you have to wait and watch and see how this division actually takes place. If you already own Tata Motors shares, there's nothing for you to do and nothing you have to worry about. Now, that all said, I want you to keep all this information in terms of in your mind as a value investor. And if you look at it as a value investor, both companies are going to do great 5 years from now, 10 years from now. And if the price is suitable to you, I would strongly suggest that you look at it. At least keep an eye on it. And whenever you can, think about it. I hope you found this video informative and interesting as always. And I'll see you in the next one soon. And maybe I'll talk about Cupid tomorrow and what is happening in Cupid, since a lot of you have been asking about Cupid. Bye.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.